welcome to this week's Humpday Holla podcast featuring yours truly and the great James Parker. Hey, this is just our little midweek what's up and keeping you in the know when it comes to your most valuable asset, your home, 8+ years education and options. And this little midweek update is just to keep you what's going on. A lot goes on from week to week. So we like to stop in during the day here and during the middle of the week and kind of keep you updated on what we've got going on. So, James, we've been talking about a lot about sort of, you brought up a topic a couple weeks ago, North Shore versus South Shore, and really sort of what's going on there. Can we get that logo where my head's not? There we go. So where we sort of aren't, our job is not to tell you where to live, but, just sort of things being brought up. And it's funny because as most of you, and if you're new to the show, hey, listen, the home away from the show is snap, send, and save.com or mortgagegumbo.com. And I had a listener this week who reached out, a listener who recommended somebody to reach out, and we did. And one of the things, James, they were talking about, and you had brought up a bunch of, we kind of did a pros and cons there. And what you had brought up was, all right, well, schools and this, that, and the other, and, insurance, right? That's a real thing for all of the state of Louisiana right now, regardless if you're North Shore or South Shore. But ironically, this listener, when they recommended the person over, one of the things when we had a chat this week, what we've been talking about is they kind of are trying to determine the difference they've seen where, hey, all right, on the North Shore, public schools are a little bit more of an option than, so to speak, on the South Shore. I'm not dissing any school or anything like that, but this was their thought process. And the way they looked at it was, all right, insurance is a little bit less in the particular price range that they're looking at. No flood zone versus flood zone. And then you start looking at not having to pay 10, 12, whatever that annual tuition is as their kids get older. And keep in mind, their kids are right now, they're in 4th grade. So they're at that move where it's time to have to start making those decisions, right? Because where are they going to be going to school? Then you get them with the kids, they're going to kind of grow up with there. So, so it's real. The North Shore versus South Shore thing that we've been talking about here. And I'm sure, for people who listen across the country, I'm sure that's whatever market you're in. But it's something now that, somebody who never thought in a million years grew up in Metairie, both of them, their families, they're lifelong residents of Metairie and Jefferson Parish, and now consider the North Shore just simply because, we talk about it all the time, those kids, right? Those pesky kids, they take priority, and that's kind of what's coming into play here, James.
Well, I lived on the North Shore before I lived on the South Shore, and one thing that surprised me is that everyone who lives on the North Shore goes to New Orleans on a regular basis, but not everyone who lives in New Orleans goes to the North Shore on a regular basis. There's people who were born and raised in New Orleans who haven't really spent any time up there at all. So I found that they didn't really know the difference between Hammond and Slidell and Covington and and to, I guess, maybe from their point of view, is that all the same to them? Because it's definitely not if you live up there. So there's like a little sub conversation that needs to happen if you're doing the North Shore versus the South Shore. If you do choose the North Shore, now where on the North Shore? Because you have advantages, pluses and minuses of all of them. Do you want to live right there by the causeway? Do you want to live over by the twin span that doesn't have like all the fog delays and it doesn't cost money to cross it? So now you got to start having like this little sub conversation under the larger conversation of North Shore versus South Shore.
Yeah, absolutely. And I think that's why, you bringing that up, I think that was a great thing. Got a client today that we helped out in 2020 who is selling their house, and they're selling their house for the simple fact of they are looking to, he knows he wants to remain on the South Shore, but what they know is they need to get closer to the bridge. They're over in Ponchatoula right now. He just got a job where he's working in Metairie, right? So the kids are going to go to St. Tammany Parish School, stuff like that. So, they're wanting to look in Mandeville now. So there's a lot of just different things. There's a lot of moving parts, but at the end of the day, that's where again, we will never tell you what's best for your family, so to speak. That's on you. Our job is just to make sure that we are presenting the options and letting you know what programs are available, right? And I think that is what is the biggest thing that we've got going on, and knowing what programs to put people into as well, James. So good stuff there. So, hey, saw the CPI came out, right? Inflation numbers today. Any thoughts on that on your part, from you?
Well, if you've go through the news, you're going to hear most people say the same thing. And the one thing I'm not
And I
hearing,
threw a question to my friend Diane Swank
y'all
at
hear that again?
KPMG, the chief economist.
Sometimes this video
That's a
starts
good
going
economy right
weird.
there.
That's all
People
good.
spending that kind.
So
That's
the one thing I would like,
podcast.
the one thing I would like to add to the conversation that I'm not hearing anyone say, maybe yet, maybe they're about to start saying this, is the fact that we are running into this year-over-year number. Sure, it was only like 5% now, but last June, about this time, last June, it was at 9%. So if you're cranking out another high inflation number on a month last year that was already a ridiculously high inflation number, you have the same effect as compounding interest, like on your savings account or on your IRA, on your index fund, on your stock returns, except it's a kick in the teeth. It's a compounding loss. So when you have inflation on top of inflation, we're starting to get into really ridiculous territory to where, look, you lost 9% of your spending power in 2022. You lose another 9% this year or something close to it. It really starts to accumulate. Really, we're all going to take like a 20% pay cut just due to inflation since the pandemic started, because that's what we're walking into now.
Yeah,
A
well,
20% pay cut.
yeah, and you bring up the year over year. This is where we're going to start finding out, uh, are the cuts working, right? Because now you're not comparing it to zero when the federal funds rate was at zero. Now, like you said, everything's being compared, and we talked about this past week. I told everybody on Saturday, because I look at the data. I told everybody, do not expect a big. This wasn't going to be a earth mover, a big rattle with today's numbers, right? So that's what we've got to look at. Then you start talking about outside of that, James, is let's say the numbers are, hey, we're at 5%, which is cheaper than 9%. What is that going to be like when gas this summer goes back up to $5, right? So there's just a lot of different things out there that we're looking at. And that's where I think it's more of a wait and see. That's why I'm not coming on here every day. We know rates are going to recede. We know they are. They do. Why aren't they just falling off a cliff right now? Well, it's because of all the political pressures, all the things that are out there, right? I mean, there's, for all intents and purposes, what's going on in Ukraine and all that, that should have a huge effect right now on rates, right? When we're sending billions of dollars over there, arms, armed forces, all that stuff, that should have a huge effect. We're not seeing it yet, right? So there's just a lot out there that they're trying to get a grip on, and we'll see. Look, the next Fed meeting's May 22nd, right? So we're going to see kind of by then. Remember, we talked about in March, they're going to hold pat and, they're going to do this and do that. Let's see. They're watching. They're seeing what's going on. What's funny, James, you and I kind of broke and we went down and, just got into the whole Silicon Valley Bank thing, right? I mean, there's a lot of talk now that there is going to, sooner rather than later, be a huge run on bank closures. And what is going to happen there, right? I mean, when you start looking at the bank closures, and we don't want that to happen, but at what point is it, whose job is it? Is it the job of everybody because maybe they just don't know the rules to ensure every penny of every deposit out there? I mean, that you talk about, that's government interference, in my opinion.
All right, which brings us to the next question. In the humble opinion of Dwayne Stein, has the market bottomed out?
Here's what I can tell you, right? And we continue to get that. And we've been advising of this now, for almost a year. So when you're looking at the real estate market, okay, or any product, it's always supply and demand. right? No matter what products out there, right? I mean, when I was growing, Cabbage Patch dolls, if there wasn't enough of them, it was what it was. So what we have to understand right now is we made it through, in my opinion, what was the toughest real estate market ever, and we survived it. There's a lot of people that aren't where me and you are, James, able to talk about this because they're now doing something else, right? They had to get out of the industry, right? Just this past week, gigantic home loan companies are closing down. Home Point or something like that, a huge loan company went under this past week, right? So when you look at it, we have more buyers than we have sellers right now. Okay. That's just the plain old facts, right? And since last June, here's a pretty unique number. Since last June, so people go, I'm away from the reduced prices. All right. Well, the same people that are hoping that prices go down are the ones waiting for rates to go down. It's not going to happen. Interest rates aren't going to go down and home prices go down. Why would it? Because you've got so many buyers that are ready to and itching to go. And we've already talked about for every 1%, 5 million more buyers into the market. So, James, since last June, the current housing market has the least amount of price reductions in a year. The least amount of price reductions. So for all those folks who are, oh, I'm waiting, prices are going to reduce, things are going to go down, that's incorrect. Last week, James, 73,000 new listings across the country last week. Okay? That's down 18% same time last year.
That's bad.
73,000. But here's the thing, and this is what I want everybody to listen to. I'm not worried about that number, the 73,000 number, and that it's down 18%. A quarter of those, 25% of those, are already under contract within 1 week. So if you are selling your house, you will know if you've got it priced right by how quickly you go under contract. Because there's buyer demand out there. The folks who are buying right now, James, we've talked about it. A lot of folks I'm working with right now took it in the shorts in 08 and 09. And they want to become, they know the pain of the last 10 years of coming out of that abyss, rising like a phoenix, so to speak, and what it's like to be paying rent and not have the benefit of home ownership, right? So when you look at that, that is who's buying now. So the interest rate doesn't intimidate them because they also get this. They know that any financing they're doing right now is not permanent. They know that they're buying the house, but marrying the house, but dating the rate, so to speak, right? And so with all that being said, James, why would a seller right now reduce their price? They wouldn't. So Gumbo Nation, here's the issue. It's not that buyers are the issue. We've got a surplus of them. I've got over $10 million in pre-approved buyers that every day I'm trying to convince, and they starting to come back to me, right? But every day we've got that. But buyers aren't the issue. It's inventory. It's digesting the rate, and then for us locally in this market, insurance.
Where are rates going here? Going from here? Mortgage rates up, mortgage rates down?
I think right now you're going to see rates kind of be where they're at. And I think when you look at come May, looking at the inflation numbers, I think you're going to see a good number. And I think we're going to see things get a little bit better. So you're going to have those dips, but then it's going to plateau. You're going to see things but that's why it's also very important, whether it's me or you working with a lender that knows what's going on. And this is for realtors too. 2 realtors called me this week because their lender didn't do what they said they were going to do. So you've got to understand the lenders. Are you working with folks who are going to know and who know how to, when to lock you in, when to win those gains for you? and be able to take advantage of it. So I think right now you're going to see rates kind of stay where they're at, and I think we're going to start to see a little bit of a better break come next month. And I think that's when you'll see an influx of the refi starting to come back in.
All right, let's say I get into a mortgage now and I'm not happy with the rate, but I have to buy now. This is I don't really get to choose. How soon can I refinance that refinance out of that? Because if rates drop off a cliff over the next few months, I'd like to be able to take advantage before it snaps back up.
Yeah, with us, I mean, we can do it at 90 days. I mean, we're not here, and that's why we also, James, that's why I also have, we're not trying to keep anybody in anything any longer than they need to be. So we've made that exception. Most lenders out there, it's 180 days or 6 payments, right? So guess what happens? That those 6 payments on 180 days, because you got a month and a half, right? You don't make your payment till, I closed in April, so my first payment's not until June because you skip May. So, our thing is, if you're in a situation like that, reach out to Mortgage Gumbo. Give us a call. We can help you out of that. And the other thing that we're doing right now is our buy now, refinance later. When you buy with us right now, when you refinance, we're limited or reducing the costs on any kind of lender fees, the fees that we can control. We're not looking to get you twice. We're looking at how can we, because we understand and we do what we say. We're backing up what we say. We're in this for the client.
Do we even bother looking at the rates today? Do we?
No, there's no need. Hey, listen, all you got to do, give me a call or go to snapsendandsave.com. So the rates are what they are. It's a number on a piece of paper. The rates right now, they're not there. There's no earth-shattering numbers or anything like that. You're looking at rates that are in the sixes right now. So mortgagegumbo.com or snapsendandsave.com. Hey, till Saturday, Gumbo Nation. Keep stirring the pot.